Welcome back to the Daily Stack. Today, it's August 26th, 2025. This is not financial advice. If you mistake it for advice, you're probably the type who YOLOs 50x leverage on a Monday morning and wonders why your account looks like a crime scene by the afternoon. Yesterday was wild. Bitcoin didn't just dip, it went full cliff dive, and then clawed its way back up like a drunk raccoon escaping a trash can. We're talking about that liquidity flush that nuked longs, Ethereum's parallel move, and the total crypto market shakeup. Then we're diving into meme coin mayhem, and finally, I'll give you the bullish stories flying under the radar that could set the stage for the rest of the week. Let's stack it.
We zipping charts, they never sleep. Bitcoin dripping, ether tripping while it's running deep. Blockchain ticking quicker, clocking every leap. FOMO hitting, pocket gripping, dreams about to keep. Train it up, cash it out, diamond hands of paper out.
So let's get into it. Yesterday, Bitcoin's roller coaster snapped the tracks. Started flirting around 114,000. Traders were comfy, leverage was stacking, and it looked like that we were building towards another leg up. Then the trapdoor opened. In minutes, Bitcoin dropped just above 110,000. That's a $4,000 flush in the blink of an eye. If you weren't watching the chart live, you probably thought your exchange app just glitched. There was no casual dip. Liquidations went off like fireworks. Hundreds of millions in long positions got torched. Twitter was filled with liquidation memes. Half the traders were screaming bear market confirmed, and the other half claiming that this was a shakeout before the pump. Classic crypto split screen chaos. Ethereum mirrored the same dance. It touched near 4950, hitting a new all-time high, and then flushed to the 4600s. Altcoins got the treatment too. The entire crypto market shed over 100 billion in market cap before it steadied. This is how the flush played out. It wasn't a mystery flash crash, it was a classic liquidity sweep. Here's how it happened. Leverage had been building like a Jenga tower under shaky hands. Longs piled up around the $114,000 zone. Stop losses stacked neatly underneath. Market makers and big players knew exactly where the liquidity sat. Once Bitcoin lost a little bit of momentum, they shoved price down, stops got hit, forced selling cascaded, and within minutes, everyone was staring at a sea of red. This wasn't about fundamentals, news, or Powell, or aliens landing on the White House lawn. It was structural fragility. Earlier in August, long-term holders were already taking profits near 124,000, thinning out the buy walls. So when the push came yesterday, there was nothing underneath to cushion the blow. Think of it like a trap. Retail traders laid out their stop losses like breadcrumbs, and whales came through like Hansel and Gretel. Except instead of candy, they feasted on liquidations. And in macro and institutional spotlight, let's zoom out. The flush wasn't sparked by any headline, but macro still sets the backdrop. Jackson Hole wrapped up last week, and Powell basically said, "We'll see." Not dovish, not hawkish, just classic Powell ambiguity. Markets wanted clarity, they didn't get it, and the result is a jittery risk environment. Add to that, the U.S. Treasury massive liquidity drain. They're refilling the cash account, pulling something like $400 billion out of circulation. That means less juice for equities, less appetite for risk, and crypto gets hit the hardest. Institutions saw yesterday's flush not as a panic, but as a reminder. Crypto's liquidity is still thin when stress hits. It doesn't take a $1 trillion event to swing Bitcoin 5%. Just some leverage stacked in the wrong spot, and boom, the whole board resets. Now, on-chain signals, they tell a story too. Exchange inflows have ticked up. This means some big wallets and long-term holders sent coins to exchanges. Translation, they were selling into strength before this flush. No surprise the bids dried up. But here's the kicker. Even after yesterday's wipeout, open interest is still elevated. The reset helped, but not enough. There's still a lot of leverage in the system. If another stop cluster builds up and gets targeted, we could see another flush this week. At the same time, watch the long-term holders. If the profit taking slowed yesterday after the drop, if that trend continues, it could mean the worst of the distribution phase is over. That would be bullish going into September. What to keep an eye out for this week? Macro could add spice. Rate cut hopes for September are wobbling. Treasury liquidity isn't over. Any headline out of the Fed or sudden shift in Treasury actions could swing crypto again. So expect volatility. Expect lots of fake outs. And for the love of God, if you're leveraging heavy into this chop, set stops that you can live with. Yesterday proved that liquidity pools are less like safety nets and more like trapdoors. And now let's get into the ongoing circus that we know and love as meme coins. This sector is now sitting around $68 billion in combined market cap. It's not just Doge and Shiba anymore. Meme coins are evolving into ecosystems with staking, governance, and utility that makes them more than jokes, even if the branding screams comedy. Take Little Pepe, still in pre-sale, raised over $10 million, planning to launch on Ethereum 2 with community-driven governance. Analysts are throwing around insane targets like 20x or even 80x post-launch. It's got the classic Pepe branding, but now layered with legit infrastructure. And then there's Layer Brett, an ETH Layer 2 meme coin that's leading into scarcity. It's got staking APYs that look like it belongs on a DeFi farm, NFT integrations, and a supply cap that's already drawing whale attention. Whispers are floating about LBRET being the next Doge of this cycle. And don't sleep on Moonbull, Mobu. This is one running on Ethereum with whitelist-driven tokenomics. Basically, supply is hard-gated, staking rewards are fat, and whales have been quietly accumulating. Mobu has the kind of setup that, if sentiment shifts, it could melt faces overnight. So while everyone's staring at Bitcoin's chop, the meme coin underbelly is cooking. Just remember, these things pump hard when retail jumps in, and then they nuke hard when retail exits late. Play that for what it is. Under the radar, bullish signals to pay attention to. Here's where it gets interesting. 1. Ethereum outflows. Nearly $1 billion in Ethereum has been pulled from exchanges recently. That's not bearish. That's whales and funds choosing to custody long term. When coins move off exchanges, it usually means less sell pressure and stronger conviction. 2. Telegram alpha. Seriously, one of the biggest signals comes straight from project chats. Whale buys, mood activity, sudden community spikes. If you're not lurking, you're missing early warnings of pumps. Old school, but effective. And 3. Altcoin setups forming quietly. While Bitcoin drama grabbed headlines, certain DeFi tokens saw accumulation. Look at Arbitrum plays. Look at ETH Layer 2 ecosystem tokens. They're catching bids from institutions positioning for Q4. Put it all together, and it's not all doom and gloom. Yesterday's flush hurt, but under the surface, there are definitely bullish tells to not ignore. And that brings us to the tip of the day. Liquidity is bait, not safety. If you're long near obvious resistance levels, you're the bait. Yesterday proved it. Liquidity pools, that's where the whales hunt, not where the traders rest easily. Know the clusters, know the zones, and never assume fat order block means protection. More often than not, it's just chum in the water. Well, that's the daily stack today. Bitcoin got flushed, Ethereum followed, and leverage reminded everyone who's boss. But under the chaos, bullish signals are still lurking. Ethereum outflows, meme coin rotations, and stealth accumulation say the bull cycle isn't dead. It's just messy. Only ever click the official hardware link in the episode description. Skip Discord promos, Twitter DMs, or meme giveaway hypes. Your keys remain sacred. Stack smart, stack daily, and I'll see you DJs tomorrow.
Don't hustle, no more doubt. Stacking stats for wildin' out. Trade it up, cash it out. Diamond hands or paper route. Huddle strong, no tapping out. Crypto keys will learn no drought.